Okay, welcome guys to part one of how to make money in stocks, the actual practical guide of how to make money in stocks. This is what everyone hopefully is looking for. So this is part one. It's going to be a few general guiding principles and ideas that I hope to just right away instill in you if you want to make money in stocks. A lot of these are, I think, like uncommon maybe, or they're misconceptions maybe. The common misconceptions that I see most newbies think, stock wise. The first is you don't want to buy a stock that's low in value relative to where it's been. You want to buy stocks high in value. You want to buy stocks when they're on the way up, right? You don't want to buy stocks when they're on the way down. A lot of people say, well, this stock has now lost 30% of its value. I'm sure it's gonna have a rebound now. And two caveats. One, that is possible, you can do that and it might work. But not for for growth strategies. Really, that's not what you're looking for. I want to emphasize that I am going to be teaching the growth strategy, and these principles 100% work and 100% matter for the growth strategy. Okay, 100% work, 100% matter. For other strategies, this may not apply. All right, we got that out of the way. Okay, back to what I was saying. For the growth strategy, you want to see a stock that maybe has come down, okay, but is now up again. You want to buy it near its high of the year. You want to buy it while it's approaching that high, or after it's made some formation, stock chart technical pattern that I'll get into in other later videos. Maybe how to make money in stocks, chart recognition or something I'll call it. That is a key thing that is, people think often in the stock market, and this I think is a general wrong. They often think, well, I want to buy a stock when it's low in value and sell it when it's high. Really, you want to buy a stock that's high in value and sell it when it's higher, okay? So that's my first point. Try to throw that out. You don't want to just buy cheap stocks or stocks that look like, oh, they're going to rebound, maybe for some other strategy, but not for this one. Okay, principle number 2. You need to cut your losses quickly. Now, if you're following the strategy that I'm going to, explain and whatnot, you absolutely, when you pick a stock to buy, you should, in your mind, see it as approaching the perfect opportunity for, continued growth or price movement upward. So let's say you see a stock at $20, or let's say it's $40, and it had a peak of $38 3 months ago, and it went down, did some correcting, and now it's at $40. And you see timing wise, this is a perfect point to buy, and you expect it to go up 20% in profit. If it goes down from that purchase point of yours by about 6%, you should be really worried and consider selling the stock. When it hits a 7, an 8, not really more than 8%, you should absolutely be out of that pick. For this strategy, the whole point of this strategy is to make your picks right and to see growth in what pick you've made within a 2-month, 3-month period. So if you've made a pick and 1 or 2 or 3 months passes and you're down 6%, or even if it happens in a week, you're down 6-7%, you have mistimed your pick, or that stock just failed to break out and continue its growth. Okay? That is important. That is more important than selling when you have profits and whatnot, because if you can't get out of these losers, you're not going to get into the right stock. And if the market's continuing to go up, odds are there were probably 2 or 3 stocks you could have picked that were probably well timed, and if you pick the wrong one, the other ones are definitely gonna, evade you. You're gonna miss out on them. You're gonna miss out on them, and it's best to get your money back and look for another pick. This often happens to me. Once I realize I've made a mistake, there is another opportunity waiting for me with like a perfect pattern, perfect stock, whatnot, and I make my money back double. Usually that's what happens. Okay, principle number 3. Of course, the financials of a company matter, but when we're looking for growth investments, we need to see, above everything, earnings per share growing year over year. Okay? Profits per share, whatever you call it, that is the key number. We don't care about news feeds. I never look up news on NVIDIA. I never ever look up news on Arista Networks. I never say, let me see what they're doing. I don't care really, beyond knowing they're a solid company. I don't care about how NVIDIA graphics card had a bug in it and the stock went down 3% for that or 5%. That's not the long-term problem. That's not if I'm seeing consistent earnings per share growing, growing and growing, that company's solid. Now, if there is something huge, like the NVIDIA graphics cards, all of them have a major security bug which is unfixable, that's a problem. But I'm not talking about that. I'm talking I'm not going to go search the company every single day for the new update. It just, at the end of the day, for these growth companies, the financials matter and the profits per share matter way more than anything. Is a company doing well if its profits per share are going up? Absolutely. Do you need to look at the details? Not really. You should definitely know what the company does. You should know generally, is that space going to do well? But you don't need to know the details. And if you're sitting there with my strategy, looking at the details and looking at news feeds, you're wasting your time. You need to see profits per share, and ideally you want to see that this earnings quarter, as compared to the last year's earning quarters, are up 20% or something like that. Those are the companies, and I'll get into picking, later, all right, and how to actually pick these stocks and identify all the criteria. But I just want to emphasize, people say, oh, we need to look at all their financials and go through the entire thing. For 2-3 years, I've only looked at earnings per share and a few other criteria which definitely matter. But, the first thing I look at is earnings per share and compare it to last year. And it's super great for me because it works. And I spend about 2 minutes, 3 minutes maybe, analyzing a stock. I look at a few other things, but before I buy it, it's 2 or 3 minutes. It's very easy, and it works. So I find no reason for me to put more effort when the more effort kind of just dilutes my factors and makes it more difficult to make the right decision, because the other factors become, they're so varied, and it's so difficult to tell what they're doing to the stock's performance. Whereas the earnings per share is it's like 70% of what matters. Okay, and so lastly, analysts. Analysts matters in the sense of what they decide the earnings per share should be, should always be beaten, right? So if they say the earnings per share for NVIDIA is going to be $1, NVIDIA should beat that dollar mark by at least, a few cents, a few percentage points every time, consistently. Other than that, I do not care what analysts say. If an analyst says, I just look for the consensus analyst for the EPS, because the whole market's going to react to that. But if one analyst says, oh no, don't buy NVIDIA because their price has peaked, and look at this and that, I do not care about that. And if an analyst says, oh, their market's peaked because, their channels of selling are saturated, or people are done buying graphics cards because their graphics cards are so good now and there's no need for better ones, or whatever. I've read accidentally and like incidentally just googling around several articles of this nature, and I absolutely give them no weight. I think for the past year, every single one I've read has been wrong, right? I actually even read positive ones and they're wrong. They say like, oh, Nvidia's new price point is going to be $320 by this date, like today, like by September 20th. I'm pretty sure that I read one, and I looked at it and I completely ignored it. I go back, I look at the chart of Nvidia and I say, is it a good investment based on all this other stuff? And I either buy it or don't, and my price target is totally different. Or if it aligns, it's coincidence. So lastly, this is actually the last one. I know I said the other one was the last one, whatever. You need to know how to acquaint yourself with charts. And I'll make, part of the series will be on this. But a lot of people just, look at charts and they think, okay, this is how it's going, trends. But you need to be able to know more than that. Volume action and price movement action. For instance, if I see a breakout on a stock, that I've been anticipating, and that breakout is done at only 2 times, or done at less than 2 times the normal volume of the stock. Like if it normally trades 1 million shares a day and it only traded 1.2 million shares and it broke out 10%, that is a very bad sign for me. Okay, and I can go into that more, but that is my point. That's my point. You need to be able to see what's going on with price movement. And I told you it only still takes me 2 or 3 minutes, right, to ever really look at a chart, or maybe even less. Super simple stuff, but it takes time to understand it and what's going on. Anyway, those are my points for this, beginning this series again. Again, sorry for taking so long to make videos again. Hopefully now I have more time. I plan to make at least 1 video a week. And so please subscribe, like, share. And thank you so much for the support and telling me to come back. I wasn't sure if I was going to, but I want to help you guys. I really like stocks and investing anyway, so this is just great, and I hope you guys enjoy. Thank you.